Aisha, today is also a day where we must watch out for cues on Mint Street. You have seen the rupee come under immense pressure. Yesterday, it had closed just 28 paise shy of its all-time closing low. It's testing that level all day today.
Yeah,
Oh, in fact,
indeed.
look at that. Rupee has hit the record low. There
Yeah,
you
it
go.
has. It's a
60.
record low now. So these are levels we haven't seen since August 2013. The rupee has now breached that 78, or rather 68.82 mark in trade as we speak. In fact, we should quickly bring in Poonam as well and get in some more details on how this is panning out. Of course, it's the dollar index. Remember, the rupee equated to the dollar, the kind of dollar strength that we are seeing. That's acting as a big trigger. B, it's the equity market weakness as well, which is also leading to some sort of outflows from the currency. So yes, INR has managed to hit its August 2013 lows. Remember, the intraday lows were as low as 68.83, and now we've breached that mark. Just a 2 paise strength coming in since that, 68.81 now on the currency. So relative dollar strength, strong possibility of a Fed rate hike in December, the rising US bond yield, and of course the FII and FPI selling to the tune of about $3.37 billion in Indian equities and the debt markets. These are four factors which are contributing to the rupee weakness, which has now, by the way, hit a record low for itself. Now, just to give you a little bit perspective, it's not the rupee alone. You are seeing a basket of emerging market currencies which are also facing a fair amount of weakness. So take a look at what the yen is doing as opposed to the US dollar. That's corrected by about almost 6.7%. The Malaysian ringgit as well has fallen about almost 5.7%. You've got the South Korean won, which has collapsed by about 3.7%. The Indonesian rupiah as well, which has fallen 3.5%. Singapore dollar as well has cracked by about 3.2%. And of course, the Indian rupee as well, which Nayantara has fallen a good 3%. But I would say we are better off than many other emerging market currencies as of now.
In fact, that's exactly what I wanted to point out. This doesn't seem to be about our domestic fundamentals. Of course, demonetization may have added a bit of pressure, but you're seeing a massive sell-off in emerging markets. You've got the dollar index hovering at a 14-year high overnight. So we had those kind of cues as well. In fact, let's bring in Poonam to discuss a bit about this. And Poonam, there's going to be a lot of pain for India Inc. as well. You've got a lot of FCCBs that have to mature.
Well, in terms of the FCNR deposits, Nayantara, it seems that yes, we are pretty much a smooth kind of a functioning coming in on there. But this weakness on the rupee that we are seeing is, of course, because of a couple of factors there. One, of course, it is the US dollar index, which has risen to nearly 101.9 levels, and besides that, of course, a US 10-year yield, which is standing at nearly around slightly over the 2.3% mark. Thus, the Fed rate hike, the possibility or a strong possibility rather of a Fed rate hike in December. These factors are of course impacting the rupee. Besides that, we have seen across the board good amount of outflows coming in from the both debt as well as the equity markets. All these factors are impacting the rupee. In fact, we also have Mr. Arvind Narayan, and good afternoon to you. This is Poonam here from the Mumbai studio. So what do you understand from the entire rupee weakness? We have already seen rupee hitting the record lows on an intraday basis today. How low can it actually get there?
The move in rupee is primarily driven by two main factors. One is, of course, the Donald Trump impact and the effect it has on U.S. interest rates going from here. And the other is the whole demonetization issue which is happening in India. Now, both these events are negative for the rupee, and that is reflected in how the rupee is weakening against the U.S. dollar. And add to this, what we're seeing in China with the currency depreciating so sharply, it's only fair that the currency in India as well will face a bit of this depreciation backlash. So I'm not surprised with the weakness. I'm not surprised with the pace of weakness. We are into uncharted territory in that sense that it's breached the all-time high slightly. I'm not worried about the level per se, but what is more interesting is to see how the currency moves from here. And that would clearly depend on these three factors. What happens to U.S. interest rates, what happens to the demonetization impact on India and Indian GDP, and third, how do emerging market currencies like China react from here.
Stay with us. Got K. Harihar as well joining in on the phone line. Hari, hi. Afternoon, just discussing what could be impacting the currency weakness right now. And do you think the factors that we've been highlighting, A, the FI, FPI redemption that we are seeing in equity as well as the debt market of late, and of course, B, the growing concern about whether or not the US Fed is going to actually hike interest rates in its December policy, that coupled with, of course, the dollar strength could be impacting the currency right now?
As we discussed, clearly the fact that the U.S. Actual interest rates are pricing in a 50 basis point hike over the next few weeks and months, as evidenced in the fact that the U.S. Treasury bills are trading about 2.30. I think that's one clear factor working against all emerging market currencies. The fact that the dollar index is going towards a 102 levels and probably looking for higher levels, that's a second factor. And more importantly, I think the fact that the U.S. is trying to do what we are doing in India, which is Make in India being replicated as Make in U.S., that is seen as very powerfully, strong for the U.S. economy and therefore will set the stage for more hikes. That's clearly one factor. But I think the bigger factor that you see in terms of the timing is the fact that the cost of funds for dollar has gone through the roof. At the same time, when the Indian, let's say, bond yields are crashing. So if you watch the screen right now, the treasury bill yields are factoring in India a double rate cut and therefore are being dealt in the 5.8% region and 5.75 region. So that kind of yield will make our bond markets clearly unattractive if you're an overseas investor borrowing in dollars and investing in rupees. So the redemption that you mentioned about, I think the FIs are continuing to sell in the bond markets. It's a very odd position when normally a falling interest rate signifies a strong country, which is evidenced by the fact of the demonetization and the fund flow coming into the banking system. But clearly now the arbitrage in terms of the dollar cost of funds and the INR rate of return doesn't seem to be working well. So there is clearly an exit from the FI's side, and they are exiting, and that's putting pressure. $3.5 billion in a month is a lot of money. There is also another factor, which is the FCNRB redemptions, and that's also, in my view, playing out in a very big way, and that is evidenced by the fact that in the absolute short term, there's a technical term called discount, where dollar is being bought without paying a premium for shorter term. So there seems to be a dollar shortage in the marketplace. Also, people are speculating that that could be because November month was a maximum month of the FCNRB inflows, and to the extent people did not hedge it, I think they're buying in the spot market. So that also is one factor that is probably contributing to the weakness in the rupee. Having said all of that, therefore, I think the rupee, was clearly going to be testing the previous low, and probably has runway to see further lows. But I think in a global context, for the Chinese currency is at 6.9293. Other currencies are also weak. I think any weakness in rupee would be seen in a positive light and as a leg up for exporters rather than something.
Oh, yes, good time for exporters, provided, of course, that they've hedged or they have to renegotiate with all of the people that they trade with. I'm also going to go across to Jamal. Now, Jamal, these are all global factors at play, what you're seeing with the dollar index, what you're seeing with the U.S. bond market, etc., which every guest is talking about. So my question to you is that do you see the rupee in the days to come actually hit 70, or you expect the RBI to continue intervening?
Hello?
Hi, Jamal. I was asking you that since what we're seeing with the rupee on the back of global factors which are unlikely to change in the days to come, do you expect the rupee to breach 70, to hit 70, or you expect the RBI to up the intervention game? It does have more ammunition now thanks to demonetization.
Well, RBI has been intervening already. The rupee opened at 85 paisa, came down to 60. It has gone back to 85. Clearly, the pressure remains on the rupee. Now, whether or not it is whether RBI will be able to hold, I don't know. I think we have to understand that we are in a new age. Long time ago, I think on one of your channels, I must have said that I think in any case, 68 to 70 is a reasonable range given export competitiveness. But of course, it's come here in a crisis as always. I think there's lots of forces. Part of the weakness is the huge rupee liquidity in the market, which is temporary, right? Hello? Yeah. Part of the weakness is rupee liquidity. Part of the weakness is dollar strength. Now, I'm not sure how much more the dollar can strengthen immediately, right? Today also, I mean, the U.S. markets are thin, which might be why things are being exaggerated. To my mind, we might see a little hiatus next week, where maybe things will quieten down. But I think we have to see 68 certainly as the floor.
So, Jamal, for now, the problem would get arrested with RBI intervention, as has been the case in the last week or so. But would you say that this is just a knee-jerk reaction, and once the dust settles down, once the markets have already priced in a Fed rate hike, if that were to come about, do you think the rupee would get back to 65, 66 odd levels, or would you say 68 to 70 kind of range is perhaps the new normal for the currency now?
Well, I think so, maybe a little below 68, maybe 67.50 or so. I think, see, the truth is, I think the Fed rate hike has been built in, right? I think the one thing that will reverse is this sudden flush of liquidity into the rupee market. Now, the question is the rupee going to, is the dollar going to continue to strengthen and push all currencies and the rupee lower? I think it will strengthen, but I'm not sure that it's going to strengthen as rapidly as it has over the last 4 or 5 days, I think one of the other forces, though, that needs to be factored in terms of looking at the medium term is I think ultimately, RBI credibility has been terribly damaged by this demonetization fiasco. And clearly, they look like they don't know what they're doing. Now, if somebody looks like they don't know what they're doing, and one of their jobs is to ensure that the rupee is steady, markets are going to try to push that. So, to my mind, I would really expect that the situation. I would say it will. I think it will break 70, but I don't know when.
So you think it's going to break 70, Jamal? You've also got the Monetary Policy Committee meeting on 6th and 7th of December. So looking at where the rupee is, the fact that the FOMC is meeting in the United States following that, I think on the 13th of December, everyone is factoring in a rate cut in India. How much of a rate cut are you expecting, and what's going to be the impact of that on the bond markets and the currency market?
I think the bond market is already taking the rates down, right? It's already below the 1-year rate. So I think basically what the Monetary Policy Committee meeting is, they're following the market, So I don't think that's going to have too much impact on anything, right? U.S. rate hike, I think, is already factored in. So I don't think that's going to have too much impact on anything. I think the one thing that is clear is that there will be a lot of uncertainty with all these meetings coming up, with Mr. Trump carrying on, with our demonetization madness going on. So fundamentally, this is not a time to take risk. We've had a very calm and quiet time for the last year and a half. Now, and as usual, our markets tend to do that because they're not deep and not liquid enough. So they are very, very, very steady for very long, so people fall asleep, and then they go crazy. So I think there's going to be a lot of volatility for some time to come. Some time to come means certainly a few months.
Arvind, is that your sense as well, that the rupee would get volatile from here before settling down into a quietish range or consolidating? Okay, Hari, the same question to you really. How do you think the trajectory of the currency is going to move from here?
I think, if we say that the root cause was coming from abroad, which is the change in the view on the U.S. markets, on the economy, I think that trend will keep pushing the dollar index up, some of it discounted, some of which is yet to happen. And my sense is really that will put pressure on all EM currencies, both directionally as well as with the FIs continuing to probably behave the way they've been behaving this month. So if you just look at the numbers, last year, full calendar year, the FIs pumped in about 65,000 crore Indian rupees worth of net money. This year, you have less than 20,000 crores on a calendar year basis on the board. And the way the trend is happening will probably flatten out for the year. The FI flow is a decent sum, and it works both on the sentiment and the supply side. So my sense is the rupee will weaken. There is reserves of big amounts. So the RBI is sitting on $365 billion of reserves. Should they seek to, they can always sell in the market. But in the past, we have never seen them try to go against the fundamentals. They just try to stem the volatility in the marketplace, but not necessarily try and go against the trend. So a weakening rupee, I think, may not be against what the nation wants. We've already seen the Commerce Ministry call for slightly a weaker rupee a few weeks earlier. So rupee can definitely weaken, and not, as I mentioned earlier, it won't be seen in a negative light. But we just have to make sure that it doesn't become a stampede. Having said that, I also want to say one more thing, that the kind of rally that you're seeing in the bond markets is assuming that the entire 5.5 lakh crore of liquidity that's come in the last couple of weeks stays back in the system. So there is always a chance that, once the withdrawal window comes in, there's a large part of it which will go out. So I'm a bit worried at the edge that the bond market rally that you're seeing and the yield crash that's happening, which is money chasing bonds, some of which will get reversed out probably in the month of January when all this scheme ends. And therefore, the FIs could again see an opportunity coming back if the yields were to go to some more sensible levels. Which is why my sense is really that even our own credit policy can pose a bit of surprise, because the RBI holds its hand and doesn't play to the gallery and just does a 25 basis point cut and says the rest will happen but in the next few months. Then the bond markets will be in for a bit of a surprise, because parts of the bond market have factored in a more 50 basis point cut. So there could be decent volatility in the bond market, and global volatility or global pressure on the rupee will continue.
Gentlemen, so good speaking with you. Jamal, Arvind, thank you so much for taking time out and sharing with us your take on the currency. But it seems India will survive the slowdown storm hitting emerging markets. That's the word coming in from Jayesh Mehta, MD and country treasurer at Bank of America Merrill Lynch. And he also believes that the strong macros will be India's strong point this year.
Definitely, the dollar strengthening is coming out. Meaning for that for emerging markets is not that great news. We will definitely outperform other emerging markets because of the very strong macro we have. And 2013 was very different. Our results were low. We have very strong results. Our macro, fiscal, everything has changed. Inflation, fiscal, so current account deficit, everything has changed. So that's a very, very different situation for India this time around.